everyone. Welcome to this week's edition of the Grand Gauntlet. As always, 5 questions from clients and at least one from a prospect. I got Patrick Hayes, owner of Hedge Plus, with me. Are you ready to go?
I'm ready to rock.
All right, sounds good. First question. What price direction, up or down, has the highest probability with corn?
The highest probability isn't up or down. It's probably sideways. I've done some analysis this weekend, some statistical analysis, looking at seasonal trends, looking at weather forecasts. So if current weather forecasts hold, which looks like a switch from La Nina to El Nino, so that's usually enough precipitation, although probably above normal temperatures. I've looked at the drone monitor. I've looked at everything I possibly can. And of course, nobody can predict what Trump's going to do. But under normal weather conditions, at least forecasted weather conditions, we are looking at probably a pretty good crop for next year without any major concerns. If that's the case, you're looking at range-bound corn. I would say that it's a higher than 50% probability we stay within a range, maybe 420 to 450. There is a better chance, however, we spike higher than that and get some sales opportunities, then go below 420 or 415. I see very low probability of us going down. So most likely, sell time premium, prepare for a flat to higher market.
Okay, some good news and bad news in that. I'm sure it's the time of year people were probably hoping for more of a rally and better prices, but at the same time, it's probably good to hear that maybe we won't go too much lower.
And the thing about probabilities and looking at the next 6-7 months is staying in the channel the majority of the time between 420 and 450 is probably really highly probable. That doesn't mean we can't spike for 2 weeks up to 480 or 490.
Okay, all right. And this question kind of ties in to what you just said there, and I know it's a question you've been getting from a lot of people. What can I do in a mostly flat market?
The best thing to do in a flat market, you buy futures. It doesn't help you if it doesn't go up. You buy puts or calls, that doesn't help you, it hurts you because time premium gets sucked out of it. The best thing is to come up with a complicated strategy, unfortunately, where you have some bought options, but more importantly, a more value in sold options so that you can pick up that time premium. That's not grammar school option strategy. Buying and selling is, you got to look at time value, erosion, all that kind of stuff. But getting time value, you can pick up right now, for example, on a 430 call in December corn, you can pick up like 38 cents if we stay at 430 or go down to 430. And we don't lose any money on that trade to 468. Now, would I do that by itself? Heck no. I'd buy a call and protect the top side, maybe take 10, 12 cents of that profit potential away to pick up 24 cents in a dull market. Picking up at 24 cents if the market doesn't move is fantastic. That's what you got to do in these kind of markets. Why do I know that? Simple. We lived through 2015, 16, 17, 18, and 19, where we saw very flat markets, and how you made money in those years. Do the best job on your cash sales and make time value your friend.
Okay, sounds good. Next question says, do you foresee a rally for soybeans? What's the probability there of an up and down move?
I think the probability for soybeans is very similar to corn. Most likely is a flat to slightly higher market was trading within a channel. However, with soybeans, it doesn't take much to spike a buck. So that shouldn't be depressing to producers. We're probably going to spend most of our time between 10.50 and 11, maybe 11.20 in that range for front month futures until we plant a new crop and we get into fall, which then will drop. But that doesn't mean we can't spike 80, 90 cents off that in a week period with some kind of weather concern. So we're going to be looking for those spikes to sell. In the meantime, we're going to play as safe as we can. Again, focus more on time value than collecting the top side. If you want the strategy, give us a call.
All right. If yields are going to keep climbing like this and more acres keep getting planted elsewhere, what's the solution here in the United States?
Hunt, I don't know. That's a good question. We're not going to keep adding acre after acre after acre around the world, okay? There's only so many acres that can be planted. I know South America's been planting like crazy. They discovered something new that they can plant a whole bunch of corn after they plant beans, okay? And that's new, and now we got a huge another crop, the Safina corn crop. In time, we run out of acres, okay? The good news is humans are locusts. We keep growing population-wise. We keep wanting better and better food and nutrition, and we keep demand stronger and stronger too. Supply is now pacing demand in any of our major products except for maybe wheat right now, because we can grow that stuff just about anywhere, right? I am not worried that we're going to have just depressed prices forever. This is farming. This is American farming. We have periods of bad prices. We have periods of good prices. In good prices, you take advantage of the rally. You do the best you can. Make sure you lock that in. And in bad times, you cut back wherever you can cut back. And you save as much as you can. Don't cut back in your marketing, though.
Right. Right. Well, it sounds like what you're offering is a reason not to panic for sure.
No, we saw this at 15, 16, 17, 18, 19. We saw the bean debacle in 18. We saw 2008 where the whole financial world fell apart and prices went to hell. We also saw a rally in 2007 and 8. We saw a rally in 11 and 12. We saw a rally with the Ukrainian war in 2021, 22, 23, where guys were making potentially tons of money. So we have good times, we have bad times. You just got to be smart.
Okay. All right. And final question this week from a prospect. Should I lock in basis on my remaining soybean bushels?
No. No, I think there's going to be opportunities going forward. The best opportunity historically from this point forward in locking a soybean basis is closer to planting season. Late April, we usually get a little bit of kick up because you guys are busy working out there, and we get a kick for the summertime last sales that we make. We're at 75% locked in on basis, 50% with the futures, and 25% off of basis contract in March. That's where I want to be. I don't want to lock in the last 25%. So again, you asked me a question, so I lock in basis. You didn't tell me where you were as a farmer. If you got nothing locked in, that's different than where we are with 75% of the basis locked in. At that level, I don't want to lock the last 25% in.
Okay, sounds good. All right, well, that's all for this week. Thanks, everybody, for the questions. Thank you, Patrick, for your answers. Anyone wants to have a question answered on this program, feel free to email your question to adminstaff@hedge-plus.com. Aside from that, I hope everyone has a great week.
Have a great week, everyone. Remember, fear, depression with these low prices is natural. You're trying to feed your family. I get that. But don't let fear and depression immobilize you with your farm marketing. Have a great week. Thank you.
Thank you.